Liberty's full-year BEE normalised headline earnings per share rose 2.6% to 930 cents. Africa's third-largest life insurer by market value saw return on equity rise some 20%. This was supported by improved operational earnings, but was offset by lower returns on available capital invested in the market. The group's long-term insurance cash flows for the year ended December were almost 4.2 billion rand. Well, gentlemen, let's start on Liberty. Bruce Hemphill saying no longer needing to use the term fix it. Liberty is fixed once and for all. In terms of operations, Chris, you agree that's what we're seeing right now?
I think that's right. If you rewind, 2-3 years ago, they hit the wall. I mean, they got their investment side particularly badly wrong. But, you know, I remember going to the Standard Bank presentation about 18 months ago, and even then it was becoming apparent that they were starting to turn the corner. They were bottoming out. But I think these results do suggest that you're quite right, that it's no longer a kind of fix it, they are on the up. Yeah.
If we deem that they are on the up, from a valuation perspective, what do we do with Liberty? It has obviously run relatively hard to this point.
It's looking very cheap on a valuations perspective, but I think like Chris mentioned, what happened 3 or 4 years ago when the crisis hits probably spooked a lot of investors from a company like this. It's a classic example of that Warren Buffett quote, you know, when the tide goes out, you can see who's been swimming with their pants off. They got a lot of hedges wrong, and they went with quantity rather than quality in terms of getting their clients in. So they really had to turn things around. They didn't have a choice. You know, earnings went down 90% at the time. So it's something that would spook investors. You know, it takes a lot of time to build up trust. They have started turning things around, but the whole market has started turning around. And insurers often follow what the market does, because often what they do with their premiums is put into the equity market.
Money market outflows, one element that we need to focus on. Obviously 13.6 billion rand outflow in 2011, and that's after 20.8 billion rand inflow in 2010. In terms of the point that Byron's just made, this is very much in line with the market, isn't it?
Yeah, no, are you talking specifically?
Money market, the money market element.
Right, no. Yeah, look, I mean, I suppose it's also reflective of the fact that, you know, they are in a pretty tough, in a much more competitive environment than they were, I'd say, 10 or 15 years ago. So, yeah, no, look, it's insurers, life insurers generally are an area that we tend to avoid, you know, because as Byron says, they're a bit of a proxy for the market, and I think we would rather we would rather do it ourselves.
Byron, any comment on that line?
I completely agree. You know, as an investment manager myself, you feel you can back yourself to put clients' cash into better sort of equities instead of relying on their management teams or their portfolio managers to take their premiums. I like the insurance business. You know, Berkshire Hathaway was built on insurance business, using the cash premiums and buying good businesses around the United States. So I do like the insurance business. It's what they do with the cash that matters. So I suppose you're investing in a management team. But as a proxy of the market, you know, I prefer to back myself to make the
exactly,
right
and you're both going to be biased on this one. I mean, if you look at Stan Lib's performance, they've done incredibly well.
Yes, they have. I mean, let's give credit where credit's due. You know, it's a well-known, iconic brand, and they have done exceptionally well. But you know, it's I can't get excited about life insurers, and this is a program that's dealing with what we call hot stocks. And you're going to be asking the question in a moment, is it a hot stock? Well, I don't want to preempt it.
But yeah. Please don't preempt it, because we've still got to drill down into a little bit more detail. The fact that they are controlled by Standard Bank, is this something of a clumsy structure? I mean, they've got the bank assurance model into Africa, 14 countries that they're supposed to be mining on both fronts. Do we really have any idea whether bank assurance is a model that should be followed? I mean, we look at Nedbank and Old Mutual, and that certainly hasn't worked.
Yeah, I mean, they mentioned that that's one of their big growth stories, is actually the joint relationship with Standard Bank.
Do you believe them?
I suppose you've got to back management on that one. Like I said, I don't like insurers as an investment. So just in general, the whole company is, you know, there's nothing exciting there. Like Chris mentioned, when you, as an investor, you're looking for equities that are going to be exciting, you've got a world of choices. So why go with an insurer? I mean, I suppose there is the property side as well, which has done really well. They mentioned that it's returned 27% a year since inception. So that's been fantastic. But again, there are other options in the property market. So it's just the whole mix doesn't really excite me.
So I can't excite you gentlemen about this stock. We've still got to pull out a couple more minutes on Liberty.
It's interesting you say that, because I think bank insurance may be a good model for the rest of Africa, in the sense that you'd be selling relatively low risk products into countries and jurisdictions where you've got an inherently high risk. So, I think from Standard Bank's perspective, backed by ICBC in China, this may be a nice way to get a good foothold into certain parts of Africa. So I think the bank assurance model in certain instances might have a resonance.
So I was too heavy-handed on my criticism on the bank assurance side of things.
Not necessarily. It may be problematic. I'm just saying, given Africa's particular situation and conditions, it might have some more relevance than it has in other parts of the world.
I don't even know if I need to ask the question at this stage, but I am anyway. Byron, heart or not, on Liberty?
There definitely are opportunities in Africa. Africa is extremely underbanked and coming off a low base. But I do think that there's other companies in different sectors that have, better opportunities up there. So I'm not hot. Not
hot. We pin you down. Mr. Gilmour, are you...
Good company,
do we have consensus?
But I can't get excited about it, unfortunately, so not hot for me.